Morning, everyone. Let me know if you can hear me. Good morning. It's November 8th, actually, 2023. It's Wednesday, and we have Jerome Powell speaking right now, pre-market, or I believe soon at least, pre-market. Let me know if you can hear me. I'm not sure necessarily what's going on here. Let me check Discord. Yeah, I think. Well, if it's posted, I can probably you can probably hear me. Anyways, so when I'm looking at this, what we got going on today, right? There's a bunch of news. This market is still running to the upside. And there's a few things to cover here. First and foremost, right, we're going to be talking about some of the weed news that came out in Ohio, right? Recreational marijuana is coming to the Buckeye State after Ohio voters approve the ballot measure to legalize adult cannabis use for non-medical purposes. And it's a big deal, as it makes Ohio the 24th state to approve recreational pot, right, that ganja, in addition to Washington, D.C., meaning nearly half of the U.S. now embraced such a stance. So the latest approval also shows how the sentiment is expanding to more parts of the country, like the Midwest, after Minnesota and Missouri approved similar measures over the past year. So a passage of issue 2, right, means that people aged 21 and over in Ohio will be able to buy up to 2.5 ounces of weed and 15 grams of concentrates, right? Regarding cultivation, up to 6 plants will be allowed, that will be allowed per person, or 12 plants per household, regardless of the number of adults living in the private residence. So note that the statutory question was decided through a voter-approved initiative instead of constitutional amendment via the state legislature, meaning lawmakers in Ohio's General Assembly will have the ability to alter or even repeal its provisions. So we'll see that recreational legalization is expected to generate hundreds of millions of dollars in annual cannabis tax dollars for Ohio, as well as thousands of new jobs to support the new economy. Cannabis market research firm BDSA even expected legal U.S. cannabis sales to grow 14% to $36.5 billion by the end of 2023. Though investors trying to gain exposure to the sector have not yet seen such promising returns, multi-state operators like Cresco Labs, Curaleaf, right, Green Thumb Industries, and was this Trulieve Cannabis have seen negative returns in the recent years, as have cannabis-related funds like the Advisor Share Pure Cannabis ETF and other ETFs. Oh, we'll see how that kind of shapes up. Remember, there was a lot of cannabis waves over the past years, especially when the first tenure of legalization was hitting the news and hitting the markets. In other news, right, all with what's his name, Fed Chair Powell, naturally. He's speaking pre-market. I haven't necessarily dived into what exactly he is talking about, but we have a lot of Fed speakers this week, so we're going to tread lightly as this bull market continues. We'll talk about the levels and the breakdown of the overall market after we go through some of this news. American credit cards, right, swelled to $154 billion year to year to a record $1.08 trillion in Q3, according to the Federal Reserve Bank of New York, notching the largest increase since it began tracking household debt in 1999. So interestingly enough, millennials saw the most credit card delinquencies. Credit card balances expected to jump a substantial amount, consistent with strong consumer spending and real GDP growth, said Dong-Hoon Lee, economic researcher and advisor at the NY Federal Reserve. So Bankrate analyst Ted Rossman also noted that credit cards and the balances have been increasing faster than any other type of debt amid high inflation and record high credit cards rates, adding that more people are using their credit cards just to get by, which is interesting enough because I saw a statistic this morning that suggested that household incomes, or maybe actually it was individuals in the U.S. that are making 150 grand a year, a calendar year, right? 150K gross income. 1/3 of them are actually living paycheck to paycheck and are relying heavily on their credit cards to meet ends meet, which is a very shocking figure considering 150K in the U.S., right? Obviously, it does depend on which state where you live, but generally speaking, it's well above the average income, realistically. Some of the other news, right? I got to check on Altria, right? MO Altria. So if I check in on Altria, it's a tobacco stock, right? Because the British government will be introducing legislation to raise the legal age for smoking cigarettes. Every year, King Charles III confirmed at the state opening of the Parliament. And the major crackdown proposed by Prime Minister Rishi Sunak last month would effectively create the first smoking-free generation in the UK. The proposed law would ensure that children currently aged 14 or younger never be sold cigarettes and will be restricted, and there will be restricted sales and marketing of e-cigarettes to children. Analysts have warned that the ban could spread to other European countries. I think that's going to be very, very freaking hard to hit all of the European countries, right? Considering how heavy of smokers the majority of them are, which could impact naturally tobacco companies like Imperial Brands, right? Japan Tobacco, British American Tobacco, Philip Morris, and I pulled out MO Altria Group, which seems to have started actually gapping higher right now. None of these are gapping lower based on the news. I need to check in quickly on those. So we also have energy, right? Crude oil and energy is on the docket, right? XLE. We saw a pretty large shift to the downside yesterday. We got a gap down, right? Some of these energy names that I like, a lot of people are calling for the next expansion lower, but I think we are in a zone where we're going to start to see the bottoming of energy for that next spring higher before we start to see an actual cyclical turn to the downside. I think a cyclical low is coming around, right, for the next quarter, 2 quarters, and I think the bottoming of crude oil is about to spring maybe this week or next week, right? So let me just check in on, that's the wrong stock. Crude oil, right, the futures, as we saw that Energy XLE was at the bottom of yesterday's S&P sector scoreboard leaderboard, down 2.2% over that and contributing to 9 of the day's 15 biggest losers on the S&P. Oil tumbled to its lowest level since August, with NYMEX crude for December delivery falling as low as 76.51 here pre-market, while January Brent crude slid intraday to a low of 86 barrels of oil. So dollars per barrel, sorry. Demand worries have been replaced, or they have replaced necessarily Middle East geopolitical tiers to weigh on crude prices, with analysts pointing disappointment in the China trade deal. And notably, the S&P decliners include Schlumberger, Marathon Oil, Constellation Energy, EQT, and so on. So you look at crude oil, right? We've dropped significantly back in the larger range, right? We could see a little more downside in this, but I think those downside days are numbered. This last drop isn't that strong in terms of volume and general momentum. So I still like it for a bottoming in the coming weeks, I should say, in the coming days, as I think we start finding our footing for oil and look for that energy sector to bottom. Now, as we dive into what's going on with the S&P, bull. I wanted to see the pullback. I didn't get the pullback. I wanted to see early week weakness in the market. All we've done so far is continuously accept distributions higher and higher, and we've held it extremely well here pre-market on the overnight session as we moved above that high 80, now acting as major support to propel prices higher, up about 15 handles from the overnight pullback. Yesterday we had a large P-shape accumulating volume at tops, which I was looking for. A stronger pullback. We came back into the prior distributions at these high 80s and could not accept lower. The only reason to look for shorts is massive resistance ledges above, right? The 44.10s, 44.20s, 25s for those short fades. Otherwise, right now, the momentum is still to the upside. The bulls are pretty happy. And if you can get below 43.88, 87, I don't necessarily see too much bearishness coming out in this market. That's going to be a key deciding factor. So right now, as long as distribution lows continue to hold and we've accepted distribution higher and higher and higher, I still expect that upside to last and to continue in this market. I don't want to be feverishly bullish buying every chance I get, right, off the open, blah, blah, blah. But generally speaking, if we open like this, pullbacks are most likely going to get bought up, and we have targets to the upside into these. Maybe we can pull this down a little, but we have them into the like 10 area, into the 12 area, and then we have like the mid 20s, low 20s as the next target, right? That's what I could see with this shaping up. So as it stands right now, I'll be looking for some of that continued upside in this market as long as we open here and we sustain this bid. I tried to look for that short yesterday into the close, see if we can break through that 88, but no dice, and we'll see how that opens up. So I'll take a look at a few questions here if you have them. Otherwise, we're going to be opening our live trading room this morning for our traders and look at what we get in terms of opportunity in the futures market. Oh yeah, it's Movember, right? We gotta not shave. So this, yeah, I've been growing this beard out for like what, a month, probably like a month and a half, 2 months at this point. Let's see how bushy it can get before I get annoyed with it. Oxy is another one, right? Like all of the oil names, I'm kind of looking at them to start bottoming this week or next for that next potential rally. I think they're getting extremely oversold. So with that being said, check out community.tradeproacademy.com. We'll be in there